And I'm here with Rotus. Good morning, Rotus. How you doing?
Good morning, Valentine. Good morning to our Smooth FM listeners, and good morning to our special guest from Stanbic IBTC as well.
Yes, his name is Dawodu Ayodeji, right? Good
Yes.
morning.
Good morning. How are you doing today?
Very well, thank you. He's an oil and gas and industrial analyst with Stanbic IBTC, and he's here to provide insights into the stories that we're going to look at. If you want to interact with us, please do so by sending messages to WhatsApp 0809-444-0981. That's our WhatsApp number. On Twitter, you can do so with the hashtag BusinessExpress981. At Smooth981FM is the handle. And you can also watch on YouTube. That's the preferred way. Watch, listen, comment on that platform. And subscribe, please. Rotus?
All right, thank you. So Stanbic IBTC has their own purchasing managers index figures that they release. And I think Ayodeji Dawodu is going to help us with that. Ayodeji, what are your latest figures for May, I guess, compared to April, as far as your PMI is concerned?
In terms of our PMI, what we're seeing for May compared to April is growth in the Nigerian private sector continue to gain momentum, with business conditions improving, well, really to the greatest extent in the last 9 months. Output and new orders growth strengthened, with companies reporting marked rises in customer numbers. However, on the downside, you could say, overall input price inflation quickened into the sharpest we've seen in the series history, which unfortunately, adds to the inflationary pressures we're seeing in the economy as prices are the inflationary pressures are being passed on to consumers as well.
So within the context of the Q1 2021 growth that we saw in the manufacturing sector, so I think it was 3.4% for Q1. How would we place that within the context of your own PMI numbers?
So I think it's very much aligned. We're continuing to see a persistent recovery in the PMI numbers since last year, which is also the case we're seeing with the manufacturing sector and the economy at large. This is being supported really by the gradual reopening of the economy following the restrictions we saw last year as a result of the pandemic. For this year, we're looking at a GDP growth of about 3.1%, which will be partly helped by the lower base effect of last year. But with that being said, we're still seeing some difficulties in the economy, particularly linked to the availability of FX as well as inflationary pressures and insecurity.
That 3.1%, that's for manufacturing, or 3.1% GDP for Nigeria?
For Nigeria as a whole.
Oh, okay. Well, that's optimistic. I like that. So I guess, okay, with manufacturing, you've got, I think, 13 subsectors or so. We didn't see all of them grow. It was only food and beverage, cement, a couple sectors in there. How can we get all 13 subsectors to register growth in any given quarter?
So as you rightly mentioned, there were only about 7 subsectors that grew out of the 13. A major hindrance to growth in the manufacturing sectors has always been infrastructure, particularly in the elements of power and transportation. More recently, and probably over the last 5 years or so, you could add the availability of FX to that as well, given that we're an import-dependent economy, and we import a lot of the raw materials that are then processed and manufactured locally. So I would say those would be the 3 elements that would need to substantially improve to see a continuous, as well as significant growth in the manufacturing sector.
Okay, so if I was to ask as far as, well, maybe you've already answered this, but as far as an outlook, I think you're sounding optimistic. If to say what's the outlook for manufacturing for, I guess, the rest of this year, do we just tread water, or does the trajectory go up and things get better, or they get worse? Or what's the outlook?
So the outlook, in the next 2 or 3 quarters, you would expect to see an improvement in manufacturing sector, more due to the lower base effect of last year, as mentioned earlier, where we saw manufacturing sector contract in the 2nd and 3rd quarters of 2020. That would be a supporting factor for growth this year.
Okay, all right, good stuff. And so in a word, is it you solve power, you solve manufacturing? Is that it? Is that, I mean, I know there are other issues, but is that a big one?
It would be a big contributing factor, but then you also have to bear in mind if you solve power and we still have the difficulties and challenges in sourcing FX, you know, despite having power, if you don't have the raw materials to manufacture and produce a sufficient amounts, you don't have sufficient growth in the sector. You could also look at the demand side as well, with consumer purchasing power weakening as a result of the inflation pressures we're seeing in the economy and in wages remaining relatively sticky. If you don't see a marked improvement in consumer purchasing power, it's hard to see supply substantially improving for manufacturers as well.
Great stuff. Okay, so I would also want to ask you about, I guess, the industrials, particularly cement. Cement posted some, you know, I think it was double-digit GDP growth, was it not 11% or so? What's as the as we talk about prices, rising prices of cement, the environment. What's the sector looking like for cement now?
So the sector, in our view, we have more of a cautious outlook on the cement sector. Over the last 3 years, I mean, we have recorded double-digit growth. Growth has been close to about 12% on a compounded annual basis over the last 3 years. We're a bit more cautious. Over the medium term, we're forecasting growth to be closer to about 5%. And really, it's because the growth we've seen over the last 3, maybe 5 years or so has largely been driven by the private sector, which has been accounting for about 70% of the demand in the sector. We see inflationary pressures, higher interest rates, as well as higher retail cement prices being a deterrent to demand from that side of the sector. Public sector finances as well have limited demand from the public sector, particularly challenges meeting revenue generation targets, high debt service to revenue ratios, and delays in securing offshore borrowings have really hindered the government's spending capacity and its ability to meet its capital expenditure targets as well. So we're a bit more cautious. As you mentioned earlier, prices is a contributing factor to that. We're seeing higher retail cement prices, partly due to the substantial surge in demand we've seen over the last 9 months or so with the gradual reopening of the economy.
Great stuff. Now, the cement has high barriers to entry, yes, because recently in the last few months, there's been talk about trying to let more players into the sector to maybe alleviate what we're seeing with prices. But my question to you is that whole talk of trying to get more players into the sector, because it's basically an oligopoly, only like 3-4 players. How likely is that? I mean, what would you have? Is that still a tough hurdle to scale to get more players in the sector?
It would appear so. I mean, government policies has been somewhat supportive of the market structure we're seeing at the moment in terms of the ban on importation on cement. There's really been 3 dominant players in the sector with substantial capacity, not all being utilized at the moment. That unutilized capacity could also be said to be a deterrent to new entrants into the space, given that they are able to flood the market, quote unquote, with cement products and driving competition out the market. So it's quite a complex position we're in at the moment in terms of the cement market.
Thank you so much for that, Ayodeji. You also, if you cover oil and gas as well, Valentine and I, and our viewers, and listeners, we talked about the OPEC Plus decision yesterday. I just wanted to get your take on, I guess, what it means for Nigeria. Prices, crude oil prices elevated, $70 barrel, $70 levels. But does this help us with what the decision from OPEC Plus and so on?
I think the decision is largely in line with what we were expecting. I think the decision to continue to gradually increase production into the markets is a positive given fragile state of demand. We are seeing a lot of the developed economies reopening, which is being supportive of demand, but there's also risk of new supply coming onto the market from Iran as well, if they're able to secure an agreement on its nuclear talks with the United States of America. For Nigeria in particular, higher oil prices are positive to a certain extent, given that we still have subsidies on PMS. Production is expected to gradually increase as OPEC has maintained a gradual increase in production. So overall, I would say it's a positive. I mean, we would always favor further increase in production, given that we're an oil-dependent economy. But I think a gradual stance, given the fragile nature of the oil market, is a positive. And you can see that in the reaction of oil prices as well. We're now above $70 a barrel, which is a level we probably haven't seen since about 2018. So the market is reading this as a positive.
If I heard you correctly, Ayodeji, I heard you say that the higher oil prices are positive, given that we're still paying subsidies. If that's a given, some people are saying that, I mean, higher oil prices doesn't necessarily mean it's going to hurt us if we're still paying subsidies instead of the other way around.
Yes. So I said higher oil prices are positive to a certain extent because we're still paying subsidy on PMS. So the subsidy on PMS is somewhat of a hedge because it reduces some of our potential income and revenue and spending power as a result of oil prices.
Also, thank you.
Thank you. Okay, so, well, I guess with the subsidy thing, it's all up to government and labor. Is there, in your view, is there any pressure to get some kind of resolution between governments and labor in their ongoing talks on the deregulation of the downstream sector and the PMS price? They've been talking. We haven't gotten any recent updates. Are they on the clock?
I think there is pressure because, you know, government revenues is really where you could say that the pressure is coming from. FAC disbursements, or should I say transfers to FAC from the NNPC has been uninspiring over the last 3 or 4 months because of the subsidies that's been paid on PMS. So I would say that for us is a clear indication of pressures to reach an agreement and to have PMS prices reflecting market reality. It's just a case of the subject matter of subsidy is such a sensitive one, both politically and for the general population as well, given the potential impact it could have on inflation and consumer spending power.
All right. Thank you, Ayodeji. There's a message in here from Yinka on WhatsApp. He said the only reason the surge in the demand for cement is only because you have a lot of persons trying to stash away stolen money, which explains why we have senseless high prices they put on properties. They need to clean those funds. And Rotus seems like some people listen to our show. You know that Falomo Bridge property, the ad that is slammed at 3.3 million naira on. I saw it yesterday. They've dropped it to 12.9 million.
We're influential.
Of course we are. If you're just catching on, well, welcome to Smooth. He said we've just started in this fight against senselessness. Thank you, Yinka, for that message. We're out of time.
Thanks. Hey, Ayodeji, Dawodu, analyst, oil and gas industrial analyst with Stanbic IBTC. Thanks for taking us to PMI manufacturing, oil and gas and industrials. We appreciate your time. And thanks for your message, Yinka, and everybody that tuned in. Thanks, man.
Thank you, Ayodeji. I'm sure you didn't expect it to be this short, yeah? The shortest 15 minutes you've experienced.
The longest, actually, but thanks very much.
All right. Take care, man.
Business Express on Smooth 98.1 in association with Stanbic IBTC. Stanbic IBTC.